Hello everyone, welcome to the presentation on the BIT tool. This video will act as a guideline for understanding how to use the BIT tool for your various business activities. A quick intro about BIT tool is it's a tool that we have developed for small and medium scale entrepreneurs for understanding various aspects of business while they are doing the business or while they are ideating to begin a business in near future. So what business investment decision tool helps us understand is it tells about the financial feasibility of projects. It tells us about the operations. It tells us about business models. It tells us about various strategies, various in business environment aspects, risk aspects, budgeting aspects, a lot of the aspects which will help the entrepreneur take an informed decision about their business. That is what the BIT tool is going to talk about. Now, in this video, there are two parts. First, I'll show where all we require to input the data. And finally, I'll also show you where the output report is being generated and what is the insights that you can actually view using the BIT tool. First of all, let me make it clear that the values and the data that are mentioned in this example are fictional and just entered so that the viewers can understand the use case of the tool. All these numbers are fictional and made up. So please go ahead with the disclaimer. Okay, now let's talk about the BIT tool. BIT tool, like I said, is mostly useful for entrepreneurs or anyone with a business idea in order to validate the business idea and understand how to go ahead in their financial strategy related aspects. Okay, so first of all, let's go by module. As you can see, the BIT tool is currently made in the Excel version, which is also being planned to be built in web-based and desktop-based tool. For your convenience, I'll show in this video about the Excel tool. In the Excel tool, as you can see below, there are several sheets in the bottom of the Excel sheet. First one is termed as full report. We'll not go through full report right now because that is the final report that the BIT tool will actually present to you. Instead, we'll first go through each of the sheets, each of the modules that are there in this tool. We call them modules because we fill data module by module with some guidelines and instructions. And once we fill all those, we have an automated full report at the end, which will give us a host of information, which will be suitable, which will be helpful for our business division. Coming to the first module here, we have something called as business background module. In business background module, we are giving prompts to enter various business related information such as business name, country, physical address, telephone, email ID, mission statement, objectives and values. Now, if you don't understand how to enter mission, vision, objectives and values, you should not worry. We have specific guidelines at the right side where you can actually see the formats and enter in the format and try to get a mission, vision, and objective statement. Now, let me make it clear that this is not a tool. This is not a tool wherein the inputs can be entered at one go at a single shot and cannot be also made by one single person. You might have to consult people in your organization, in your business, and try to understand various information that you need to gather. So once you have all the information, filling this tool will not take much time. So also this tool offers you flexibility that you can keep filling the information whenever you find time, whenever you get the information, you can save it. You can again come back and fill the remaining pending information so that if you fill in phases also, this tool gives you the desired output. And also another aspect is even if you fill only selected modules of the tool, you will get the selected modules of the tool as an output. So this tool offers that level of flexibility. Now, going ahead, now we have something called as sectors, where we enter information about various sectors where our business belongs to, then various products and services that we are actually offering in our business. Then we also write about the organizational structure, that is staff names, designations, and staff's roles and responsibilities. Let me repeat again that as informative as possible. You need to try to fill this tool. That will help you get a very good output. And then you also enter what are the various customer segments of your business. Once you enter all these, the module of business background is finished. And if you wish to, you can actually place your business logos in this box, and that will automatically be taken in our report. Next comes the business environment module, the second module. It actually contains two key aspects. One is SWOT analysis and one is special analysis. The SWOT analysis stands for strength, weakness, opportunities, and threats. We have several strengths, weaknesses, opportunities, and threats in a business. To understand what exactly constitutes strength or weakness, please see the guidelines below mentioned and you'll be able to write the strengths, weakness, opportunities, and threats. Then moving ahead, we have something called a special analysis, like I mentioned. Special analysis covers political, environmental, social, technological, legal, and environmental aspects that are impacting the business. You can again read the guidelines and examples, and you can mention various components of all these special analysis. And try to be again as much in depth, as much informative as possible while filling up this sheet. Then your business environment module is finished. Then comes the third module where you talk about the business model. Business model module talks about two key tools. One is value proposition canvas, and then we have something called as business model canvas. Now, what is value proposition canvas? Several times we as entrepreneurs, we as business people, we are very much focused on what is the product or the service that is there in our hand, but we don't try to understand what is it that the customer or the market needs in the first place. So value proposition canvas helps us understand what is the value that the customer or the market is demanding from us, and what is the value that we are providing to the customer, to the market. That is what value proposition canvas helps us understand. You don't have to worry too much about the concepts, about the logic. Just keep filling the headings, whatever you're posed with. First, you need to enter about customer jobs. What are the various jobs that the customer aims to achieve or receive? You read the instructions and then you write. Then you talk about what are the existing pains that the customers are undergoing. It could be something problematic aspect that they are currently facing in their current activities. So write down the customer pains. You can also tag the necessary customer segments over here. Then we move on, something called as customer gains. Customer gains are what are the positive outcomes and benefits that these customers seek from the market. You write down again similarly customer gains, you tag the different customer segments. Then you come and fill something called as value map. Now in value map, you're actually entering what we as a business are providing or are aiming to provide. So you write what are the various products and services that are being offered by the business. You also write what are the major pain relievers that you are offering through your business and what are the target customer segments. You are also writing finally about what are the various gain creators of your business according to the customer segment. Now the gain creators over here and the customer gains over here might seem overlapping, might seem little similar, but it's necessary to fill both of them. Now, customer gains and gain creators could be similar. Customer pains and pain relievers might be similar. The idea is you, after this exercise, understand if the market requires some aspects, are you able to provide all of them or only a part of them? For example, market needs A, B, C, D. You are only providing A and C. That is still fine. But to acknowledge and understand that this is what our business offers and this is where we stand is very important in business planning. And that's what value proposition canvas helps us achieve. Now, after filling value proposition canvas, now these are only inputs. Don't worry about the output, the final report that we'll cover at the end. But this is how we are supposed to fill the data. Now, after value proposition canvas, we then move on to business model canvas. In business model canvas, we are talking about a more elaborate version of the business model. Value proposition canvas talks only about the value proposition that the business is offering, but business model canvas talks about several other aspects in addition to value proposition canvas that the business is made up of. And if you're able to find an answer for all the components of business model canvas, then it can be assured that you have a sound business model. You have an understanding of a sound business model. So what all things you need to fill? You need to fill about channels, first of all. How do you reach out to customers? Don't worry about the technical terms. You can just see the guidelines and you can fill these up. Channels. Second one is customer relationships. What type of relationships do you establish with each customer segment? So we also have examples. So you fill out all these things. Then you fill about revenue streams. What are your various revenue sources, revenue streams? You can actually write down various revenue streams. If it's only one, it is only one. If it's multiple, you write down multiple. Then you also write about what are your key resources that your business needs. Is it in terms of human, non-human, technical, non-technical, tangible, intangible, any sort of key resources your business needs, write them down. You cannot write down each and every resource that is there, but try to write down as many as key, top, most important resources that you require to deliver in your business. Okay, then up next we talk about key activities. What are the various key activities that you need to consider doing in your business? You need to write it down. Then key partnerships. A lot of times there has to be good amount of partnership between private sector, public sector, academicians, technology partners. So a lot of partnerships, a lot of businesses have. Write down who are your key partners for what all activities. You can mention it in the key partnerships. And you write about your cost structure. What are your important or major costs involved? Please remember, we are not asking for detailed cost information at this point. We are only asking about the heads of the cost or the major aspects of the cost. That's it. That is all about business model canvas and value proposition canvas. Up next, we'll move to the next important module called as operations module, business operations module. So what business operation module captures is basically the workflow of a business. What is workflow? Every business has several workflows. Each workflow is a combination of several stages. For example, a trading business could have something such as receiving the goods, storing them in the warehouse, sending it to the retailers, and selling it finally. So there could be these sort of workflows, and we're trying to capture that workflow with a chronological order in this business operations module. Okay, so first of all, you write about what are the various, you write about various stages that are there in your business. You can write it chronologically, but little bit overlap in terms of chronology is also fine. But what is more important is you list down all the stages that are there in your business over here. Up next, you then provide linkages between different stages. For example, you have written down stages 1, 2, 3, 4, 5. You need to then establish the linkage between different stages. For example, after stage 0, there is stage 1. After stage 1, there is stage 2. After stage 1B, there is stage 1C. So depending on the stages and linkages, you are going to write down what are the stages and their destination. Now, below that, we have given scope for you to enter within each stage. What are the steps involved? What is the difference between stage and a step? For example, one stage is receiving the goods in the godown, whereas the steps could be the vehicle enters the godown, then the labor unloads the goods, the labor will stack the goods in rows and columns, and then the accountant will come and take note of the stock entry. That is, these are the 4 steps within one stage of goods reception, right? So steps are the minute line by line activities that are happening within a stage. So you write down even each step involved in each stage, and if possible, write down all the timelines. So this is about the workflow. Once you write down this, we have a detailed workflow with this. Now, next comes four important sheets. We call them cost sheets, financial management. There are four types of cost that we require, that this tool requires you to input: input cost, labor cost, asset equipment cost, and overhead cost. Now, input costs are also called as consumables costs. These are the costs which are raw materials, inputs, consumables that are being used, that are, we call it as direct materials that are used in the production of your final product. Now, let us see one row of entering this item. So you have something called a stage name. You can enter the stage number, stage name. Within the stage, I mentioned that there are multiple steps within each stage. You can even mention which this step is referring to. This item is referring to which step. Then you write about the name of the consumable or input. Then you divide them into which within inputs there are several aspects. It could be raw material, consumables, energy, miscellaneous, maintenance, or supplies. You select the subcategory very importantly. You write down how many units and what is the price per unit of the input material. Then, very importantly, you also have to write if you have bought, for example, one ream, and each ream is of $2,000, for example. So the total cost is $2,000. Now you're using that input for how many outputs? Is it for 100 kilos of 100 bags, or 76 plants, or 50 units, or whatever? You have to clearly mention this input is corresponding to how many outputs. In whatever units you might want to enter, you can enter. Then if you want to write in remarks, you can write. And at the end, the last two columns are those which should not be entered, which is actually calculated automatically. You get a unit cost and you get a total cost. A similar exercise has to be done for labor cost as well. In labor cost, there are slight changes. You write down stage name, stage number, step reference, cost category. You have labor type, you have contract type, you have category. This will be deleted. The category, you have any activities you might want to write. What is the quantity of labor? Is it 1 person, 2 persons, 3 people? You write it down. Then you write down how many hours per day per labor is required, number of days per labor, and what is the wage rate per day. And this total labor calculation is for how many units of output. You need to write that very importantly. And the last three columns, man days, unit cost, and total cost, will be calculated automatically. Moving on next, more easy, asset or equipment cost. Similar things you need to enter in the beginning: stage number, stage name, step reference, asset name, category. Then over here, you enter the quantity of the asset and cost per asset, and you write down what's the useful life or the capacity. Right now, if you talk to your accountant, you'll understand what is the useful life or capacity for any asset that you are considering. You can write what is the salvage value, because some of the assets after the useful life, whatever is the useful life, they can be sold for junk, they can be scrapped, and that value should also be recognized. You can then write down adjust factor. What is adjust factor? Basically, there could be multiple divisions in your business. And if the assets are being used across multiple divisions, then you need to make sure only a proportion of the assets are actually earmarked over here. That's what is called adjust factor. This will be 100 by default if you have only one product or only one service or only one business vertical. But if it is something you want to apportion, please mention the appropriate adjust factor. Adjust factor is a proportion to which an asset has to be categorized under a specific heading. Then automatically total cost per item depreciation will be calculated. You don't have to enter anything over here. Then you go ahead and fill the overhead costs. Pretty straightforward. You fill the overhead name, category, unit, monthly cost, and just factor it into market and you get the total cost. So these are the four ways in which we input the costs. One is input cost, labor cost, asset cost, as well as overhead cost. So in these four sheets, you cover all the costs that are there in the business, right? And make sure you also consider the opportunity cost in your business. What do you mean by opportunity cost? A lot of times entrepreneurs might be working in their own house. Now the rent will not be paid to anyone because it's their own house, but that still has to be considered or calculated in your calculation. Similarly, if you're employing someone within your house, within your family to work for you, and you don't pay them, even their salary, you have to imagine a standard salary and write it down because that is a more appropriate way of calculating your profits or costs. So with that, we'll move on to the next module. We move on to sales projection module. In sales projection module, we just have to write down the different products and services will be automatically shown over here based on what you write in earlier sheet. Based on various products that are over here, you write down what are the expected sales of this product for month-on-month sales. Also write down an assumed sales growth rate year on year. You don't have to enter each year's sales figures. You can mention that this is the first year month-wise sales projections, sales expectations, and you can give a growth rate for this. And then over here, the automated selling price will be calculated based on the cost that you have just entered in the previous four sheets. The selling price displayed in the gray column is basically cost considering all the four headings plus some profit margin. I will show you where we are doing the calculation. It's either that, or if you feel that no, this is not the cost, you want to enter a cost manually, you can enter that manual cost as well in this green box. So you need to either enter this or this. This is automatically captured, or this is what you generate. So it is to you what you want to calculate. Then we go to this important tool called as parameters. In business parameters, we make several crucial assumptions behind the bid tool. We write what should be the profit margin over the cost for your selling price. You write what is the tax rates that your products or your country faces. You also write something called as PE multiplier, that is price earnings multiplier. You can look up for this and understand what could be your relevant PE, price earnings, for your business. So it's very important to note it down. Then you have something called as capital structure. You need to clearly write down about shares. You need to clearly write down about the debt. So this is about the shareholding. This is about the debt or the loans. So before going into shares or loans, let me explain something very important over here. You need to first write down about what is the initial capital requirement for your business. That comprises of few things. What are the various assets you need? You need to write down the details. What the working capital that you need? What are other initial expenses that you would incur? Right. So based on that, we will calculate what is the total funds that your business requires in addition to a contingency fund. You, for example, require $374,550. And in that, what is the percentage of equity and what's the percentage of debt? That is also something that you should determine. For example, if it is 50% equity, 50% debt, then what happens is for that equity, 50% equity, 50% debt, make sure your above calculations are actually matching, right? So for example, over here, I mentioned that my equity is 187,275. I need to get this much from equity. Then I need to make sure that my total share capital is 187,275. 275. Accordingly, I have to make sure my number of shares are so many, say it is 187,275. and number of shares, price per share is 10 rupees. So if I multiply this is this, if I multiply this and this, I'm actually going to get share capital. Share capital is nothing but number of shares into price per share. So for example, the if there are 10 shares with me and the price of each share is 5, the share capital will be 5 into 10, $50. That is what is share capital over here. And once you enter that share capital, you also write maybe if there are two shareholders, then what is the share of person A, person B? If there are more than two, you can add more people. Apart from that, we have also mentioned something called as debt over here. Debt is the outside borrowing that you get for a business. Say, if it is 187,275, you are getting it from three sources. You could get it from three sources: long-term debt, short-term debt, and working capital loan. Enter the amounts for these three, and also enter what are the interest rates for these debts. You get the interest calculation, and very importantly, write down the discount rate and the growth rate relevant for your business. These are the important business parameters that you need to enter and be aware of. Then we move on to the next module called as partnership canvas. In partnership canvas, we write about potential partnerships or existing partnerships that we have. And just answer these. What are the value that you want to be created? What are the desired assets that you require from a partner? What are the assets that you offer to the partner? What is the transfer activity between the two partners? For each partnership, you can write down these four aspects that will help us understand the partnership canvas. And finally, we have something called as a risk management matrix. In risk management matrix, it's very simple. You read the guidelines again. You write what are the potential risks that the business faces. And after you write that, you have to attach or you have to clearly write what is the likelihood for a particular risk on this drop down and what's the impact of this potential risk based on the drop down. What's the likelihood and what's the impact? You need to write down these in detail. And once you have written this down, then, my dear friends, the inputting or the entering the values for bid tool is finished. Like you can see, it takes some time, some information to fill up this varied modules, but it is worth it because now what is going to happen is you're going to get a final full report based on what all we have been filling. You get the bid tool, which is what I'm going to show to you. See, in the bid tool, what we will have first about business background information, a lot of things that you are entered. You will get an organizational structure of the business. You get a business environment, basically SWOT analysis, strength, weakness, opportunities, and threats. You will also get a pestle analysis report of your business. You also get business model. So this is what is value proposition canvas. Right side is the customer profile, what the customers need, what are they expecting. Left side is what are you creating, what are you delivering to the market. All value proposition. This is value map. This is customer profile. That is what we have been able to build. Then you get business model canvas, BMC. You have 9 very important components that are determining your core business model and understanding various key aspects of your business. Believe me, if you are able to understand, if you're able to formulate your value proposition canvas and business model canvas, you have reached a very advanced stage of ideation for your business. And then we talk about workflow stages. What are the various stages and the linkages between this will be displayed over here. We're also working on developing a workflow diagram. This is in a tabular format. We will convert this soon into a diagram and show how from one stage to another stage your business actually flows. Gives you a very beautiful pictorial representation of your business operations. Then we come to financial management. We get a host of very interesting information. Just have a look over here. Again, I'm saying these numbers are fictional, so don't take them literally, but try to see what is happening over here. For say for all these products, I just enter values for one product. I get the total cost, I get the consumables cost per unit, labor cost per unit, depreciation per year, overheads per year. And I also get the units produced in a year based on my projections. I also get variable cost per unit, fixed cost per unit, and finally, very importantly, I get the cost per unit that I'm incurring for this. Then I add the profit margin, which is again an assumption. You can actually change it in the parameter sheet. All the important key parameters can be updated in the parameter sheet that I showed over here, right? Then you enter it and then you get the selling price per unit. That's the beauty of this tool. Then you also get the financial statements. That first of all, you get the projected profit and loss for first year, month on month. You get for each product what is the sales and the revenue. These are all automatically calculated. No need for your input. What are the sales units? What are the revenue? What is the price? Are all automatically calculated from the sales projection module. And what are the month-wise different expenditure that you're going to incur on different heads? What is the month-wise profit and loss? Then we have something called as revolving funds. Revolving funds are nothing but the inflow and outflow of cash month on month for your business in the first year. This gives a very interesting insight of how much cash you require for each month and how much you need to arrange every week. Then coming to very important aspects, what are the projected profit and loss for the next 5 years? In this case, you can see this is the projected profit. The last number is the projected profit. Some people use EBITDA, earnings before interest, tax, depreciation, and amortization. Some people use EBIT, that is earnings before interest and taxation. Some people use PAT or EAT, profit after taxation. So any number you want, any number you need to understand, you can actually see. But ultimately, this is the amount that will be the profit that you are going to earn after all the deductions, including taxation. Then you have the balance sheet for the 5 years. You have various liabilities, various assets clearly written down over here. Then you have cash flow statements for the first 5 years on various operating activities, investing activities, financing activities. These are the standard formats across all the countries, across all the businesses for understanding the financial aspects of business. There are three key components of financial statements. One is the profit and loss statement, one is the balance sheet statement, and one is the cash flow statement. So we have just seen the costing of our business, and we also seen the financial aspects, financial statements of the business. Up next, we then go to ratio analysis in financial module. In ratio analysis, we again have multiple types of ratios. We have profitability ratios, we have liquidity measures, we have efficiency measures. You see how these ratios are automatically calculated for your convenience and try to understand how your business is performing. Is it as per your expectation or is it comparing well with its peers? It also shows various liquidity measures and various efficiency measures. You can see over here various capital ratios, coverage ratios, solvency ratios. Then we show something called as budgeting. Now, budgeting is basically saying what is the estimated cost, right? And if that is the estimated cost, what is the actual cost? Now, actual cost is something that you need to enter from your books of accounts. If your business idea is not in existence, your business is still not yet started, then there'll be no budgeting for you because budget is estimated minus actual. If you don't have actual because you haven't started the business, there's no question of you getting variance or budgeting. But for established businesses, they can actually compare their budgets and see the variances. We have variable cost variance, labor cost variance, and asset and equipment variance and overhead variance. Then we have very importantly something called as valuation. This is very important tool for loan providers or share capital providers. What is the various valuation metrics? What is the value per share of your business? For example, over here it is $1,379 per share or rupees per share or shillings per share. Then you have asset-based valuations. Then you have earning multipliers where all these figures are calculated automatically. And we have given in-depth understanding of what is meant by each of these terms in our glossary. You can please check out the glossary as well. Then after the valuation, we come to the financial feasibility. We talk about NPV, that is net present value, and IRR, internal rate of return of the business. For example, NPV of your business is $853.76,398, or IRR is 79%. Similarly, you have return on investment. What is the percentage of the return that you're earning as profits over your investment in your business? You have something called as payback period. That means in how many years your business is actually able to recover the money that is being invested. Over here, if you see, you are recovering 100% between third to fourth year. So around 3.4, 3.5 years, you are recovering whatever money you invested in this business. So this sort of calculation will also be quickly available for you. Then you have the partnership matrix based on what we have built just now. Different partners, different expectations and activities transferred will be clearly shown. And finally, you have risk management matrix. You have out of various risks that you have entered, what are the key risks that are there that are being shown over here. So that is what the outputs or outcomes are. The report is shown in BID tool, Business Investment Decision Tool. We are very happy to work on this, make further fine-tunements, further improvements for this tool. We are integrating, we are working to add artificial intelligence to this. We are bringing more interesting modules, more inferences, more insights for much business helpful decision making. This is just the version 1 of the business investment decision tool. We look forward to working more on this and getting you more useful aspects of the tool. We'll also be working on the web and desktop version of the tool very soon, like I said earlier. I hope you find this video informative. Again, please see the video in addition to the guidelines that are there and the glossary that is there. It will be very useful for using the tool. I hope this helps. All the best for your business journey. Take care.